Hey, welcome back everyone. It is time for another red hot cover call video. Hey, look, today we're going to talk about my dividend tree. A lot of people are asking me about it, so let's go ahead and talk about it. We're going to talk about the stocks that I own, how much I make, and I'm going to show you how I buy all of these for free. That's right. I do not use a single nickel from the 9 to 5. I'm retired, so none of my retirement money buys these dividend stocks. I'm going to show you exactly how I buy these dividend paying stocks with covered call and cash secure put premium profits. That's what you need to do if you want to get ahead in this stock market. Because when you take from the 9 to 5 and put it into dividend paying stocks, it can seem like an absolute long road to hoe. Well, when you're writing covered calls and selling cash secure puts and you're making $300, $500, or maybe even $1,000 a trade, maybe even per week, then you're able to buy these dividend paying stocks every single time you have a profit and you start to grow that dividend tree grove. Now, I've planted many dividend trees this year, and the idea is simple. What I do is I write covered calls, sell cash secure puts, and then I take those premium profits and buy a dividend paying stock. I do that until I collect 1,000 shares, and then we move on. And we take all of the dividends that are absolutely splashing the account, and we then buy the current dividend tree plant. Now, I'm going to explain this a little bit more, but let's go ahead and talk about this. I'll tell you what, a lot of people love the dividend passive investment strategy. So, hey, look, if you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm going to go through a very quick rundown of what I have, my plans for my next dividend tree plant. So I want you to stick around to the very end because that is the dividend tree plant that we're going to talk about. Now, if you don't understand this whole dividend tree grove, dividend tree, and dividend tree plant, you'll get up to speed rather quick. See, the way I see it, dividend-paying funds and stocks produce a cash monthly dividend, very similar to a fruit tree. Well, to me, it is a cash fruit that I pick every single month. So I'm going to plant my dividend tree for which I collect a cash dividend monthly. Now, I'm going to have many of these trees, and many of these trees are called a grove. So I want a dividend tree grove that generates some $20,000 a month. We have been very successful, and I'm going to show you exactly how much I've made this year, so stick around. So let's go ahead and jump right into this. All of my members see all of my dividend trees. All the stocks and ETFs that I buy, they see them. Every time I make a trade, they see which ones I'm buying. If you want to be a member, cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. See all of these when I'm buying them. Now, let's go ahead and break these down. I have what seems to be about 13 of these. What we do is we write covered calls and sell cash secure puts. We take those premium profits and we buy any one of these. We're looking to add to that monthly income. Now, what I want to show you is this. I have everything from closed-end funds to high-yielding dividend funds, all in between. If you've never heard of a closed-end fund, I have about 4 of those, and closed-end funds used to be the go-to for all wealth managers to get their clients that monthly income. And 4 that I've owned since 2011 are CHI, CHY, EOS, and ETV. Now, CHI and CHY, they use debt to generate their dividend. They pay about 9 to 10 cents per share per month. If you ever wondered what a closed-end fund is, I would suggest that you Google it. It's pretty interesting how companies will create a closed-end fund. They will take that closed-end fund to IPO, and then all the money they generate from that IPO, that's all the money they can use to then work their plan to then generate the dividend. Closed-end fund. No more money can be added. So that's CHY and CHI. I also use ETV and EOS. Now, they're a closed-end fund as well, and they use the buy right covered call. They will buy the asset, and then they will write a covered call. they generate more per share per month. I think ETV generates in and around 12 cents and EOS generates about 16 cents per share per month. Absolutely love these closed-end funds because they just keep putting money in the account. It's steady Eddie, and I'll be honest with you, the stocks trade steady Eddie, and I never have to worry about them. In fact, during the real estate crash in 2007, they fell with the rest of the market, but they rallied right back to where they were just 1 year later. I don't even look at the share prices. I collect that monthly dividend, and that's the plan for those closed-end funds. Now, I also own QYLD, which pays right around 16 cents per share. I would not consider this a high-yielding dividend fund, but it's right on the edge. A lot of people like QYLD. It uses the NASDAQ. It writes covered calls on the NASDAQ. So that is one that I've had for quite a while. Now we start to get into those new high-yielding dividend funds where they use simulated trades, they use options, they're able to generate really high weekly and monthly dividends because they are using near-term covered calls. And I'll tell you what, this strategy generates incredible returns for their investors. So right now I have QDTE, which uses daily covered call options, generates a weekly dividend. Absolutely love that. I need to add more shares there. I have QQQT, QQQY, and IWMY. Now we're starting to get into those dividend payers that pay anywhere from 33 cents to 52 cents per share per week and per month. And when we start talking about these high-yielding dividend stocks, we have to talk about NAV erosion. NAV erosion is the number one topic when it comes to these, because these dividend-paying stocks that I'm about to mention will actually distribute a full dollar or more. And of course, they're trading for like 18 bucks. So if they keep paying $1 per month every single month and the fund does not rally back, what you're finding is the share prices are depleting, and nobody likes talking about that because the fund keeps falling, and next thing you know, they're going to reverse split. So what you really need to do when we start talking about these high-yielding dividend funds, we have to really think of it as a return of capital with a little bit of yield that we can spend and pay the bills. Because these companies, their entire goal is to produce as much near-term cash flow for their investors. And what that means is their share price is going to fall because they are distributing hella monthly dividends. Just look at ULTY. ULTY used to be a $20 ETF. They keep paying the dollar dividend. Next thing you know, it's trading for $9. So they're going to reverse split this because it's on the NASDAQ. And if they keep distributing $1 a month, the NASDAQ's going to send them a letter saying, hey, your share price is too small. You need to figure this out. And that means they're going to reverse split it. So if you have 100 shares, you're going to have 50 shares. But ULTY goes from $9 to 18 bucks. The one thing you need to understand is that although you lost half your shares, the dividend won't change because ULTY did not have its money reverse split. So let's say ULTY has $100 million invested in it, and that's what they're using to sell near-term covered call, using options, generating the fat dividend. Well, that did not reverse split. So they still have the money. Now they're just distributing that money to less shares. That is what's going to happen. That's what's going to happen. So if you own 100 shares, you could bet if NAV erosion happens, it's going to reverse split and you're going to have 50 shares. I'll tell you, I have 2,000 shares of ULTY in my IRA for that purpose because I know they're going to reverse split it, and I want it to reverse split down to where I have 1,000 shares. This is just a little game I play. It is my dividend tree empire. Yeah, that's right. We're going to talk about how much I make per month, so stick around. Now, yieldmax and Defiance are great because they use single stocks to generate their dividend. They will actually use a synthetic trade, and they will write covered calls based on a synthetic trade. So all that money they make goes back to the investors. So they have NAV erosion all over the place. So what you're hoping for is the underlying stock will continue to go higher, so the yieldmax ETF will go higher. Right now I have many of them, including AMDY, which is AMD's yieldmax fund, Coney, which is Coinbase, PYPY, which is PayPal. I have ULTY, I have Tesla, which is Tesla, I have yieldmax, and then in my IRA, I have more shares of AMDY, I have PYPY, ULTY, YMAX, QQQT, ULTY, we have BIDO, and we did have shares of Misty, MSTY, which is MicroStrategy's yieldmax fund. We went ahead and cashed that out for a $4,000 profit. And when Misty comes back, just as MicroStrategies will come back when Bitcoin pulls back, we're going to get back into that investment. SPY-T is one that I absolutely love. I've owned as much as 2,000 shares of SPY-T. I have my kids into SPY-T. Pays that nice 30-something cent dividend. Love it. I ended up selling that because I took that money while I'm waiting for the X date, and I did a couple cash secure puts to generate some near-term cash flow so I can then buy more shares of SPYT. So right now, that is my dividend tree grove. And what I do is I use covered calls and cash secure put premiums. And as I generate a profit, and it could be anywhere from $100 to $1,000 to $5,000, and I'll randomly buy some of these stock. That's why the share count is odd in some cases. I just keep dumping it in. Like today, I had a $1,000 profit in an SOXL trade. Went ahead and bought 52 shares of AMDY. No particular reason. I'm just looking to add to this total, and we're going to grow that monthly dividend income. Now let's go ahead and take a look at how much I make monthly. This is October, and we brought in $23,000. You can see all of these funds are generating income. This would be October. Let's go ahead and take a look at September. You can see we're growing that number. And if we go back to August, you can see we are really making some great strides adding the monthly dividend income. Just to finish this up before we take a look, the next dividend stock I'm going to be buying, this will be my monthly cash flow here, passive income using dividends. You could see this year has turned out to be incredible. Our goal when we started was 10, and we moved that up to 15, and now over the past 2 months, it's incredible. Some of these yieldmax funds are returning anywhere from $2,000 to $3,000 per month because I have like 1,000 shares. So this is incredible. So we're going to try to keep this going. Although you see the big numbers here, what I'm really hoping to do is to be very consistent and make $15K this year. Next year, I really want to grow that, and I would love to make $20,000 per month with just dividends in 2025. Now, how am I fueling all of this growth? We're fueling it with covered call writing and cash secure put selling. So what we do is we buy stocks and leveraged ETFs. We write covered calls, and when we have a profit, we take that profit and we put it in to these dividend-paying stocks. So we go from a semi-passive investment strategy to a passive investment strategy for which we have to do nothing. And that's the pure beauty of it. We go from the trade idea to the wealth idea. And that's what I try to preach to my members. My members get to see every single trade I make. They get to see every dividend stock I'm buying. And we talk about this all the time because we want to go from a trader which can make money, but we'd love to go from the trade idea to the wealth idea, where now we have passive income for which we may or may not have to work so hard at the 9 to 5, maybe retire early, or just live the good life. Now, my next dividend-paying stock is going to be AMZ. Now, AMZ is a single stock ETF from yieldmax that uses Amazon for its underlying stock. Now, we all know Amazon is the 800-pound gorilla in its space. Look at this, absolute trending higher. And in fact, it's peeled off just a little bit as we get into this Christmas season. I love it. Let's take a look at AMZ. AMSI does pay a decent dividend. In fact, their last dividend, they paid 76 cents. The month before, they paid 65 cents. They paid 47 cents the month before, 76 cents, and they paid 95 cents back in June. So looking at AMSI, I love the consistency. Yes, you get this trade for which is a little bit lower, but I'll tell you what, if you notice, Amazon is trading just like this. So AMSI will be my next high yield dividend stock, and AMSI is the yieldmax ETF that uses Amazon. And I'll tell you, I love it because we get this little bit of a sell-off in AMSI that'll give us a nice little potential run-up, I do believe, with Amazon probably having some of its biggest months in the next 2 months. I can see AMSI paying anywhere from 80 cents to $1 per share if Amazon has a nice little run higher. I love using yieldmax stocks that use great underlying stocks. Amazon is absolutely the 800-pound gorilla. For me, it is a no-brainer to have a little bit of AMSI in my portfolio. That will be the next one I invest in. That's $19.91. I believe right now you're actually getting it at a discount. If you're interested in following me and watching me trade my account, my kids' accounts, and when we take that money and then buy these dividend-paying stocks, you're really watching a successful trader that has generated hundreds of thousands of dollars. I'm taking those profits and moving them into passive investments, high-yielding, dividend-paying stocks, knocking it down. And here's what I'm going to tell you. Every single month, we're loading up on the dividend-paying stocks. Right now, I might have 13. By the end of next year, I'll probably have 23. And that is the goal. We are going to stay the course. Writing covered calls, selling cash secured puts, taking those profits, and buying dividend-paying stocks. If you want to be inspired by me, what I want you to do is go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. You see all of my kids' trades, and they have smaller accounts. So if you have a small ball account out there and you want to see trades that they are doing, successful trades, and the dividend-paying stocks we're buying, then you want to be a member. Hey, look, I'm going to leave it right there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.